Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Brent crude prices post the worst fall in 3 years as investors choose to sit on the fence amidst cloudy outlook on demand. UK Prime Minister Theresa May claims to have reached an agreement with the European Union on Brexit. Back home, Zee Entertainment's promoters say they are willing to sell up to half of their stake in the company to a global strategic partner. And Flipkart Group CEO Binny Bansal steps down on charges of serious personal misconduct. He denies any wrongdoing. And a clutch of stocks that will react to numbers as well, the likes of Sun Pharma, Ashok Lane. We'll talk about all of that. First, let's take a look at the trade setup for the day. The world markets and well, frankly, if you look at the picture, they look a bit iffy because the US markets, the way they shut shop, or the European markets, the way they shut shop, a mixed set of cues really for our markets. And frankly, look at what our markets have done. So Europe was strong, US wasn't, so mixed set of cues there. Asia fairly mixed. Nikkei is up about 1/3%. Shanghai is down about 0.5%. Hang Seng in line with Shanghai down about 1/3% as well. The SGX Nifty pointing towards a small bit of an uptick, which could be deceptive as well because we could have a good start simply because of what's happening to crude. Now, everybody knows crude prices fell quite strongly. What added fuel to fire was Donald Trump saying that hopefully Saudi Arabia and OPEC will not be cutting oil production. Oil prices should be much lower based on supply. Now, we know what some of the other OPEC members have done in the past when Donald Trump has kind of via tweets or otherwise pressurized them. So we don't know if Saudi Arabia's mention about cutting oil production will really have a meaningful impact on crude prices because the other OPEC members may not play ball. But whatever the case may be, oil prices have come off. Just take a look at what's happened to crude, WTI or Brent over the last 15-20 sessions, and we are clearly in the bear territory. Now, what does this do for our markets? I think this chart is important from that perspective. If you look at this last 1 month picture, at least in the month of November, there has been a near perfect correlation between what the Nifty has done versus what the Brent crude prices have done. The last 4 or 5 sessions, every single session, the Nifty and the oil marketing companies both have done exactly what a perfect negative correlation to what the crude prices have done. If crude prices went down yesterday, we went up. OMCs went up and the Nifty went up yesterday. The day before, crude prices showed a little bit of an uptick. Both the Nifty and the OMCs came down. Friday, oil prices had come off. Viewers would remember, OMCs and Nifty both did really well. And in today's session, I dare say, we might have a bit of a reaction, 1 on the oil marketing companies and 2 on the Nifty as well. We are not in the business of prediction, but it seems to be a safe assumption that we'll have a start in the green, which may actually pick up during the course of the day. Stocks, frankly, are making very measured moves. We don't have too many stocks really making those big moves, save for a result-based Aisha move or otherwise. And the reaction to bad news has kind of subsided, except for those few small banks. We don't have really strong reactions to bad news. In fact, frankly, if you look at the Nifty 100, not a single Nifty 100 stock is at the 52-week high as well, despite we now being at about 10,600 odd levels. And volumes are very, very tepid, and delivery-based buying across the board is very low. I looked at the delivery percentages for a few stocks, random picking, and I didn't see terrific delivery-based buying happening in any of those names. In fact, the DI volumes last few days have been very tepid too. So, mixed bag of sorts. Difficult to say what could happen in the near term, but for today's session, seems to be that the trend is our friend, and what happened in trade yesterday could well continue in the session today. However, there are some stocks that will react. Like actually a lot of stocks that will react. I've just chosen 3 or 4 which I thought were the most important ones. First one is Zee, without doubt. Now, the views are divergent out here. The news is, and I'll talk more about this a bit later on, but promoters are going to sell up to 50% of their stake to a strategic partner. What happens? Stay tuned on First Word. We'll tell you more about this later on. But Zee is an important stock to monitor in the session today. There were some very weak numbers by 2 or 3 names. Deepak Fertilizers, Engineers India, Novartis. Novartis, EBITDA loss for that company. So while the numbers were expected to be bad, and I was speaking to Darshan about what could happen, but the fact that there's an EBITDA loss here might just result in the stock reacting a bit negatively. Engineers India too was a howler. Wouldn't be surprised if the stock reacts a bit negatively. Sasken is an important one. Aside of results, I mean, they've received an assessment order from the IT department with a tax demand of 68 crores, which has been raised. The company is naturally in the process of filing an appeal, but I don't quite know if this move has a bit of a negative reaction on the stock. We'll watch out for this. And lastly, a couple of names. Firstly, the MSCI Global Standard Index additions and deletions, and Darshan will speak about this later on, but watch out for Divi's Lab, which has been added, and the deletions include a BHEL and Siemens. So could be interesting to see if there is some reaction happening to these stocks also or no. Last but not the least, Ashok Leyland. Again, a bit of a pickle as to what could happen. One, the results were below estimates, and Vinod Dasari is going to resign effective 31st March next year. I don't quite know how the markets would take it. My guess is that it would take it not too well, and there could be an initial reaction on Ashok Leyland. But let's wait and watch. All I'm saying is I wouldn't be surprised if the stock starts off a bit negatively today. Not a prediction, just an observation. However, let's tell you what's lined up on First Word today. Uncertain future may have prompted investors to hold back from betting on crude, but will a production cut as contemplated by OPEC members change the dynamics? Jonathan Barratt weighs in on that. The market regulator, that is Indian market regulator, wants credit rating agencies to make more disclosures. Sajid Mangat takes us through the rationale behind such a move. Subhash Chandra and his family want to sell up to half of their stake in Zee Entertainment to a strategic investor. I go through the details and what brokerages have said. Sun Pharma has posted a surprise loss in the second quarter. Darshan tells us what's ailing the company. And then Nikki Johnson finally to tell us what's helped Tata Steel post its highest quarterly profit in 9 years and whether that has the ammo to make the stock move today. But firstly, crude prices did move. They declined the most in 3 years as investors flee a market hammered by swelling supplies and a darkening demand outlook. Both WTI and Brent stretched their record streak of losses to the 12th session. The latest slide was sparked by a warning from OPEC about the outlook for the global demand. Will this losing streak continue? Jonathan Barratt, Chief Investment Officer at Probis Securities, with us on the phone line. Jonathan, good having you. Thanks so much for joining in. Is this overdone? Or would you believe with what Donald Trump has been egging OPEC to do as well and the darkening demand outlook, we might well stay at these levels for the time being? Jonathan?
Yes, good morning. Look,
good morning.
Look, obviously prices have come down a long way.
Yeah, please continue.
The prices have come down a long way. We do expect some support coming back to the market as OPEC and also the US send signals to the market that we should expect the constraints to come back into play. So although we've been under a lot of pressure, we do think that stability will come back to the market in the not too distant future.
Interesting. Jonathan, a lot of people now on hindsight say that maybe the crude prices didn't deserve to go up as much as they did because it was more on a fear that Iran supplies would go away. Now that those fears are not quite there because 8 nations have been allowed to be free of sanctions and the US shale production is happening so much, it is difficult to fathom crude prices, at least Brent crude prices northwards of 75. Would you concur?
Yes, look, the interesting thing is that when we looked at taking 1.8 million barrels of crude out of the market with Iran, the waivers that the US put in place sent a message to the market that the US was not as adamant as it was about sanctioning Iran. The key to stability will be if, in fact, the US holds true to those importing nations in 6 months to stop importing oil. Combine that with production outputs out of Saudi Arabia and Russia, and then you should see a floor in the price.
Okay, Jonathan, we'll leave it at that. Thanks so much for joining in for that quick perspective. As always, it remains very difficult to forecast what crude could do in the near term. But in lieu of what's happened, maybe a level northwards of 75 for Brent might be difficult. By the way, for all of you who want to read more about crude, do log on to the website bloombergquint.com. There is a story right at the top center page which speaks about how oil has dropped the most in 3 years as investors flee a darkening outlook. It gives you a quick synopsis of what both the trading bets right now on crude are and what the investment bets on crude right now are. So good story to read. Do log on to the website bloombergquint.com. Let's move on to the next piece. And in an effort to ensure investors are better informed, SEBI has enhanced disclosure guidelines for credit rating agencies. The circular lists parent company support, liquidity parameters, material events, and the historical performance of rating agencies. Sajid Mangat now joins us to simplify what has the regulator tried to do via the announcements yesterday. Sajid, good morning.
Good morning, Neeraj. You know, if you look at the SEBI circular, it follows the November 2016 circular where SEBI has enlisted a lot of stuff which credit rating agencies have to disclose as part of their periodic press releases. Now, credit rating agencies come out with releases every time they do a review of the client, which is the issuer in this case, or every time there's a new offering or debt instrument offering which is coming, or bank loan coming, which requires them to rate that instrument. As part of that, what SEBI is now trying to do is that it is trying to enhance the kind of disclosures that credit rating agencies will have to do, also align it to the market realities. Now, you know, to give you a classic example, that, you know, INFS, we all knew that there was something amiss because the bond markets was showing a different reaction to INFS papers, while the rating agencies continue with the rating. That's one kind of example which is there. We saw the similar thing happening in Reliance Communication as well, where the bond spreads moved away from or deviated, and the rating agencies continued till there was an actual event that happened, which happened much later. So what SEBI is trying to say is that, you know, you need to make the investors aware of what's going to happen and make note of the market realities. So in the case of if a deviation in bond yields happen for a company, you should take it as a material event and look at the company and see whether it is indeed you know, material in nature, or is it just an aberration. At the same time, what the regulator is also saying, that, you know, you should come out with a periodic review of liquidity, cash balances. These are the things which are not available to normal investors except at the time of half-yearly results, when you have the limited review, or audited results when you have the review. But credit rating agencies have access to them on a monthly basis or a quarterly basis, because they are you know, reviewing the ratings. So what the regulator is saying, that, you know, bring in those parameters, disclose it as a separate section in your you know, in your press release.
Whether or not you change the rating.
Whether or not you're changing, you can retain the rating, but or reaffirming the rating, but you tell them that this is the kind of payments which are due in the next few months. This is the amount of cash balances they have. Where is the money going to come for payment of these balances? We saw in the case of you know, couple of NBFCs where their bonds, even though they were AAA, they sold off at an A+ or a AA rating, you know, because the yields have you know, yields went up short of because there was no liquidity there, right? You know, so to preempt that, they are saying that bring that. Another thing which the regulator is saying, that, you know, if you are considering that a company's rating is based on support from the parent, like in the case of banks, public sector, to take a classic example, like an Allahabad Bank or any bank which is on the PCA. Now, all those banks have a AAA rating because they have been backed by the sovereign. So you have to mention it very clearly that there is a backing of the sovereign with respect to fund infusion into them, and that's the reason why the rating continues to be what it is. At the same time, if you are rating the company on a consolidated basis, you have to mention which are the individual entities or subsidiaries which have been consolidated, and what are the positions, financial positions, so that which led to you taking a consolidated view and a rating of a company. So it's more disclosures and more you know, transparency in the way it is being done. It's not that rating agencies aren't doing, but rating agencies' press releases are you know, little compact in nature. They don't give you the exact report unless you are subscribing to them or paying for them. So for a normal investor, it's very difficult to get the exact nature of it. What this has been done is to make sure that many of that information is now in public domain.
And available at the right time.
At the right time for the investor.
Got it. Sajid, just very briefly, How does this change what rating agencies could have done in the past? I mean, historic versus current.
So, there are a couple of arguments for and against it. Rating agencies could have done many things. The point is that many times rating agencies themselves don't know if there's a default,
right,
because the insurer is not cooperating, or the debenture trustee is not informing them of a default. So, like in the case of classic case of RCOM, where the issuer did not inform them, the debenture trustee did not inform them, and so they did not do it unless, and they took an action only after the results were announced, and it was part of the notes to accounts that they took cognizance of it and then went on to do it. So there are multiple challenges from them, and CRAs have been asking RBI to give them access to the platform, which gives them on a daily basis or a monthly basis what is the kind of defaults which are happening, because all these companies or all the banks at least have to inform the RBI on a regular basis, and that's something which is missing from the credit rating agencies. So yeah, it's trying to bridge the gap. Whether it's will fully resolve the issue, I am not sure of it. Many of the issues or many of the reforms which the SEBI is undertaking has been done over a period of time.
Sure.
But it's more enhancement and more transparency which has been brought.
Yeah, sadly, it needed a big event like IndianOpen to make.
Well, we make reforms only when big events happen.
Anyways, but good changes, I would presume, a lot of these, and hopefully they'll go a long way in trying to bridge this asymmetry in information, if not anything else. Sajid, thanks for putting that into perspective. That's Sajid Manga. Then again, a story around this filed on the website, so do log on and read more about this. It's a very interesting academic piece as well. Okay, the three stocks which I think will matter today are from the large cap space, and then we'll talk about the mid caps a bit later on. Zee Entertainment, the promoters plan to sell up to half of their shareholding in India's largest broadcaster. Now, what's happened? Sell up to 50% stake in the company to a strategic partner. This is a part of a strategic review that they have done of the businesses in view of the changing global media landscape. I use the words that have been used in the press release. They're looking to convert Zee Entertainment into a tech media company, a global tech media company, I might add. Goldman Sachs and LionTree are the advisors to the deal, and the outcome of the strategic review will be concluded or to be concluded by March or April 2019. Now, the news is known. Now, let's just try and analyze this in two ways. One is the current shareholding and what happens to the promoter shareholding or the public shareholding as and when. Some of it is pledged as well, but some charts out here to show you what the existing promoter shareholding and the public shareholding is. This is what the existing shareholding looks like. Promoters hold about 41.6%, public about 58%. Now comes the interesting bit. Look at the promoter holding, and some of it is pledged, which is about 24% out of those 41.6. So more than half is pledged. 16.95% of the overall shareholding is unpledged. The public shareholding divided, obviously there won't be pledges here, but divided into what foreign institutional holders hold versus others hold. And FIs, as you can see, is a fairly large chunk of Zee's holding. About 40.81% of Zee's holding is held by FII. So the promoter holding post this transaction will come down. Pledged or unpledged notwithstanding, will come down to about 20% or slightly more than 20%. Now, the points to ponder really, and this is something that is coming again from the statement, but I've just chosen them based on what I think is the order of importance. The proposed transaction is expected to address SL Group's capital allocation priorities. Now, does one read into this as that the SL Group's or the promoters' capital allocation priorities are now not in favor of holding the capital in Zee versus holding the capital in other entities? They have interest in mining, infrastructure. Recently in an NBFC as well, they bought the LKP, the business of LKP Finance. So that's the other business in which they have reported interest, and of course a bunch of other spaces as well that they remain in. They've mentioned clearly that India remains a priority market for Subhash Chandra and the SL Group, and the family will continue to invest in growth opportunities in India, and therefore that begs the question as to whether Zee as a prime entity, something that will deliver big returns to the promoter family and thereby to shareholders, is now a thing of the past or no. And I think I won't put any words out here because it's all left to conjecture, but I thought Macquarie put it very, very nicely. They've given the pros and the cons. I read 3 or 4 brokerage notes. I thought Macquarie summed it up very, very succinctly. They're saying that the deal could provide an entry for a global tech company into the Indian landscape and into Zee, as the case may be. It could help plug gaps with respect to Zee's media tech prowess, their great media prowess. Whether media tech are they as successful remains to be seen, and therefore this might help plug gaps in that. But the key question is, it does raise concerns on the promoter's view on the longevity of the current business model, and therefore it does raise concerns for a minority shareholder as well, that if the largest shareholder currently thinks it's better for them to get out 50% of their stake and put it into other businesses based on capital allocation priorities, what should a minority shareholder do? The counter way to think of it is that if a large player comes in, it probably aids Zee Entertainment's balance sheet and programming, so on and so forth, and therefore that could help too. But it'll be chalk and cheese. It'll be very difficult to say what the stock does today. One thing that might go in this favor, though, just one last point out here, is that Zee stock, and if you pull up the YTD chart, you will see what I'm talking about. The stock price of Zee Entertainment has underperformed significantly. YTD, it's down about 20-24%. In the 12-month period, it's down about 19%. So it's been a stark underperformer. Does that cap any kind of trading downside that could have come in Zee Entertainment as a result of this news? Well, let's wait and watch. But off record, some of the fund managers that I've spoken to all think that this is not the best thing that they would have, or this is not the thing that they would have hoped to hear from Zee Entertainment. JP Morgan believes there could be upside on the stock, so the view is split. Let's wait and watch what happens. Is the view split on Sun Pharma? That's the next piece on First Word, by the way. It reported an unexpected loss in the September quarter after a one-off antitrust litigation provision. What else has played a role in the drug maker's earnings? Darshan is standing by with a fine print and what the stock could do today based on what brokerages have said. Darshan, morning.
Yeah, good morning. So I don't know how much it will react negatively, that's for sure, because the numbers are bad. But remember, yesterday's stock was down 5%. So that is something that you need to understand, that and the Taro strong, and as we had pointed out, Taro strong numbers, the reflection was already there when the stock price went to 600. Now, how did the stock price, how did the performance pan out? A miss on the revenues by almost 600 crores is something that came out with. Net loss, I wouldn't read too much into it because it's an exceptional item of almost 1,214 crores because of antitrust litigation. The EBITDA is down. EBITDA margins came in line because it's a ratio, but the EBITDA is down. It's at 1531 crores versus estimate of almost 1,700 crores. So there's a big EBITDA miss that has come in. Now, individually, if you're looking at it, India sales are down 16%. US sales are up 11%. This is on a year-on-year basis, but quarter-on-quarter, it's a disappointment. It's down 10%. Emerging markets are flat, and the rest of the world is down 2%. What did the company say? What isn't the most optimistic con call? A lot of statements came in. First of all, the India business was down due to a one-time expense inventory reduction because of issues in the supply chain. The management expects India growth to recover back to low teens, and what they say is that they expect a gradual scale up from approvals in Halol. As far as the US business is concerned, quarter on quarter, yes, it was a disappointment. $348 million versus the estimate in excess of $380 million. But they do not see any major sequential decline in the base portfolio for the US business. Their initial take on Illumina is in line with the expectation that is there, and ongoing litigation in terms of Zytiga, in which yesterday Wockhardt fell in trade, has impacted gains of Yonsa, which is their key product. Management spoke that there will be high upfront marketing costs for the specialty pipeline to launch certain products in the second half of the year. So all these things coming out, and they're saying R&D costs will go. So I wasn't too impressed with what the management says. So I think second half probably will be tougher than the first half because of increasing expenses across the board. There have been two downgrades that have come in on Sun Pharma. There is Edelweiss and IDFC, but the other brokerages also have cut the target price and EPS on Sun Pharma.
So, well, Darshan actually said it at the start of his piece as well. The stock had already reacted 5% yesterday. So, ideally would have started off negatively. Don't quite know the extent of the correction, but should fall a little bit today's session as well.
It could fall
a little bit in today's session as well. Darshan, thanks for putting that into perspective. That's with regards to Sun Pharma, but no such worries for Tata Steel, which posted its highest quarterly profit in 9 years as a one-time gain, and Bhushan Steel's consolidation aided operational performance. Nikki Mirchandani is here to tell us how to read these numbers. Nikki.
Yeah, the net profits have been higher in the last 9 years, but then we also got to bear in mind the fact that this includes Bhushan Steel performance, and hence the numbers are not comparable on any given quarter, even YOY basis for that matter. I'm going to start off with the basic numbers, 34% uptick that we're looking at in the top line performance, and if you look at the bottom line performance, a fourfold jump there coming on the company at a number of around 3,600 crore. The EBITDA performance, it's 89% growth. Now this is the EBITDA number, the reported number that I'm talking about, which is higher than estimates, and the margins are at 21% as compared to 14.5%. If you include this EBITDA number includes two exceptional items there, Indian operation where the gains of around 250 crore have been registered, and also European operations where 600 crore gain has been registered. Apart from that, on the bottom line front, we are also looking at some exceptional item out there. 163 crore compares to the loss of around 45 crore, mainly on account of the sale of subsidiaries and European joint ventures and the liabilities which are not going to make back again to the book. In terms of the volume breakup, we're looking at a good performance coming in from the standalone business. We're looking at a 3% uptick there. Bhushan Steel obviously sequential because the numbers have been added back in quarter, and European business has seen a 13% downtick, along with Southeast Asian business which has seen a 3% downtick there. Consolidated basis, again a good show, a 15% uptick, clearly helping the realization of the company. Let's look at the EBITDA per ton performance. Clearly that's where the beat has been delivered from. Standalone, we're looking at a 73% uptick. On consolidated basis, it's a 65% uptick out there. What's really led to good set of numbers, the standalone numbers are good on account of the strong demand which we've seen on the domestic front, and a lower production seasonality has impacted the European EBITDA as well as the kind of volumes that the company has delivered. Bhushan Steel deliveries have risen as much as 34% sequentially. Overall, if I had supposed to sum up this, it's the good show that is coming in from the standalone business along with the Bhushan Steel, which is really helping the company. Two important parameters from the Tata Steel conference which was held yesterday, Neeraj, was Bhushan Power and Steel. The progress, they're going to be, they pretty much maintain their stance there, and they say that the bid to an extent has been compromised, but they're going to be standing by the kind of original bid which was initially submitted. And on Thyssen Group, because that's one parameter also which we'd be keenly keeping an eye out before we said, like before the earnings were out, it said that it's made a good progress and it's in discussion with European Union, which is for phase 2 review, which is expected to take another 90 days. So hopefully after 90 days we'll have some clarity. But then also one important parameter, Neeraj, all the brokerages around have actually cut the target price for Tata Steel despite good show or maybe inline set of numbers. It's on account of the fears that the company now could go for an aggressive bidding for Bhushan Power and Steel. In the meeting yesterday, it said that the bids are going to be opening on December 3rd. Post that, it's going to be taking a call. So if there is a revision or any aggressive bid, that could weigh down on the financial situation of the company.
Okay, well, that tells you a lot more about Tata Steel than just the numbers. December 3rd probably becomes an important date as well to monitor. Nikki, thanks for putting that into perspective. Numbers good, but in line. Remember, not comparable because of the enhanced financials due to Bhushan, and if indeed aggressive pricing for Bhushan Power, then that could add to the woes on Tata Steel. That brings us to the end of First Word. A lot more lined up on Indian Open though. We discussed the key opportunities and challenges in Indian markets and the oil and gas space in particular, with Manishi Raychaudhuri of BNP Paribas is as fine a voice that comes into the oil and gas space. A special conversation with Rajesh Gopinathan of TCS on how the IT major is driving away from traditional services. That comes up at 9:30. But after this break, a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats बेटा।
वाह, रेज अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की जनरेशन wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद।
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Hello and welcome. You're watching Indian Open right here on Bloomberg Quint. A quick glance across what's been happening in the Asian markets and how they're faring at this current juncture. We got a dip of about 1/10% or a marginal correction coming into most of the indices out there. So Hang Seng is the one that's losing the most, down about 0.5%. For SGX Nifty, we are seeing a positive sign of trade today, so up about closer to 0.5%. 10,649 is where we are trading at. But definitely all eyes are going to be on what happens as a reaction to the coming off of crude oil prices. Remember, 12 straight sessions and crude oil is convincingly in a bear market right now, be it WTI, be it the Brent. So all that is going to impact not just our market sentiment, but the key pocket to watch out is going to be the oil marketing companies, which anyways soared in yesterday's session. But before that, let's go across to Darshan. He's joining in right now with a quick synopsis of what's happening in the derivative space. Darshan, good morning.
Good morning. And we actually yesterday was very, very surprising. The huge amount of short covering was seen on the Nifty. We were down in trade when we opened, but we ended up almost 100 points. So you can see short covering that came in on the Nifty. We will open about the 10,600 mark in trade, and as the SGX Nifty is indicating, probably close to the 10,650 mark in trade. Fresh buying was no doubt seen on the Nifty Bank. The Nifty Bank was up almost close to 1%. An open interest build up of 3%, that too on the long side. Now, where are positions taken? We spoke yesterday that the narrow range seems to be 10,500 to 10,700. You can see from 10,500 to higher levels, call writers are active, and put writers are active from 10,600 to lower levels. So that's the way we are currently at the 10,600 mark in trade. So that's the broad range, 10,500 to 10,700 is what we are looking at. What happened in trade yesterday in the morning? Call writers were much more aggressive, but that reversed as the day progressed and the Nifty started to move up. So put writers became much more aggressive, and the call writers had to shed positions in open interest. There are two stocks in the F&O ban as of now, Adani Power as well as the new entrant is Jet Airways. The PCR also moved up given the fact that the Nifty was trading with a positive bias. Which are the stocks that moved on high open interest build up? So you had other counters, so except for a Bank of India which saw fresh short, except for a Godrej Industries and ICICI Prudential which managed to inch up, fresh short positions were taken in Allahabad Bank, Bank of India and IGL. Obviously Allahabad Bank and Bank of India reacting to the numbers that came out. And as far as open interest declines are concerned, where positions were taken, Jubilant Foodworks saw short covering, Canara Bank saw short covering, Just Dial saw short covering, Wockhardt saw long unwinding given news of its own in terms of the Zytiga drug. But overall, these are the counters in which positions were in open interest decline was seen.
Okay, Darshan, thanks very much for that. That's the F&O wrap out for yesterday's session. Interestingly, Neeraj, you did speak about a whole lot of stocks in first word and the kind of reactions we'll be seeing. One stock particularly, and interestingly, Z. If you remember, there was that Morgan Stanley note which came out, which actually downgraded the counter from an overweight to an underweight. They put a target of, I think, 410 on the stock. Stock still trading higher than that, but they had said that Z5 as a play for them is not going to work when you're taking competition from Netflix and Amazon, and break even will only happen post 2025. The management had then come on and said that while content acquisition is a bit expensive, they still believe traditional TV is the way to go, and they, so whether or not anything's changed on that front and capital allocation strategy that they're talking about now, whether it's more towards Z5 and having something on that digital side.
Yeah, well, all of those questions to be answered. Maybe the management joins us a bit later on. But let's pose those questions to Gurmeet Chadha, co-founder and CEO at Complete Circle Consultants, joins us right now on the show. Gurmeet, morning. Thanks so much for joining in. Talk about the markets at large too, but since we are talking about Z, let's start off with that. How did you read into this announcement? How would institutional investors take this change in priorities of capital allocation from the promoter out of Z into the other businesses?
Neeraj, a little early to comment, but seems to be a step in the right direction broadly, because they want to make it as a tech company, and we've seen that and we have discussed this, that how tech and data, that fusion is the new oil, which people are talking about. So I think the deal will take time. The management itself has indicated that it will be towards the end of the fiscal year. At what price, at what rate the stake goes, I think it's still not out. We don't know who the potential strategic partner would be. I think that will play a very, very key role. If they can manage a nice international player with great credentials, this might be very positive for the company. But a little early to comment right now, because we don't know the valuation specs. We don't know who's going to be the strategic partner. Yes.
But what would the call on the stock be, or you just wait it out till more clarity comes in?
Yeah, just wait it out. I think the stock has done well on back of some good earnings. Their on-demand video streaming Z5 has been a great contributor. The digital business is going up smartly. So I think just wait it out before more specs come in right now. They're better plays right now.
Yeah, but the stock has underperformed the last few days, weeks, months, and therefore that could be a bit of a cushion as well. Gurmeet, are you reading a bit into the Ashok Leyland news as well? One, that the numbers were marginally sub-estimates, so weak, slightly weakish quarter, but we know Dasari is no longer going to be at the helm of the company from March.
I think Neeraj, unprecedented, top-level shake-up across sectors. It will have a bit of an impact, but I think what gives me confidence is that, I've been speaking to a lot of friends who are CV dealers, and I think there'll be some pre-buying on FY20. There is a scrappage policy which comes in place in 2021, which will give a fillip to the demand. I think the interest rates and the yields will soften with oil now back to at 65-70 range. So I think I'm not too worried on on too much downside just because of the shake-up. I think the CV cycle to me looks to be in an uptrend. Plus, it has a very little impact with the EV disruption. Commercial vehicles will not get that big. Disruption may not be that big as compared to the passenger cars. We already saw last quarter Q3 in US Tesla selling more units than Mercedes. So this space gets less disrupted by the EV disruption as well.
The other one to focus on is Sun Pharma that reported a net loss this quarter of 219 odd crores. There was a one-time loss. There's some settlement charges of 1,200 crores regarding a litigation in the US. But the management seems to take that in its stride and said the soft Q2 numbers are not a reflection of the company's performance as a whole, and they are focusing on strengthening their core operations. Gurmeet, how did you read into the numbers? Obviously, there was this one-off.
A touch disappointed, I think, because the tariff numbers were good. I think what worries me is that the US specialty continues to show a lot of expense. The generic business saw a decline of about 10% on Q-on-Q. And even on valuations, if you see, and if you take FY20 EBITDA, it's still at about 23, 24 times. So it doesn't give you a lot of, despite the price correction, a lot of valuation comfort, at this price as well. So you may not see huge downside in the stock, but the potential upside may be capped. As I said, I prefer some other models like Divis, where there is earning visibility. There is a nice combination of CRAMS and generic business. We are seeing EBITDA. We are seeing improvement in margins. So you have better plays in pharma like Divis, Alchem, Biocon to look at.
Well, Divis has those added benefits. We'll talk about that too. Keep in mind. In fact, let's take it to our research team, go across to the huddle to try and figure out what could happen to Divis and some of the others based on the MSCI additions and deletions. We'll talk about some stocks in news, some smaller results and stocks in news as well, and maybe take a quick glance at M&M and what it could do as well. All of you, thanks so much for joining in. Let's start off with maybe the MSCI additions and deletions.
Yeah, so pretty much on expected lines. I think the street anticipated Divis will come in, and that's the only addition that has happened in the global standard index. There are two deletions, and both of them on the capital goods side. So BHEL and Siemens go out, and this will be effective of 30th November. So till whoever funds mirror the MSCI global index, they will have to till November 30th buy Divis and sell BHEL and sell Siemens. So that's the trend that we've seen. So this is on the larger scale. So Divis probably will react positively. We don't have any estimation in terms of how much $1 million will flow in. In terms of the small cap, yes, there are 13 additions and 37 deletions. So a lot of NBFCs have found mention in the additions. Companies like AU Small Finance Bank, Equitas, Bharat Financial, ICICI Securities. So all these companies, PNB Housing, they all come in. The other additions include, an Adani Transmission, Future Consumer, Schaeffler India, Suntech Realty, Westlife, and Tata Chemicals. And among the deletion, I was surprised to see the name of L&T Infotech as a deletion that has come in because that's performed well. The others include Bombay Dyeing, which has been falling significantly, CDSL, which has been falling, a lot of tile company, HSIL, Somani, Manpasand Beverages was pretty much expected, VRL Logistics. So these are the companies probably will react, but I think the big trend will come in only in Divis in terms of the buying flows.
Well, let's see. But as Darshan said, on anticipated lines, this is something that was being spoken about for the last couple of days for Divis as well. Let's wait and watch what happens today. Thanks, Darshan. Thanks for putting that into perspective. Now, to some key results and some stocks in news. I think a lot of stocks will move based on results. So let me go to Agam first to talk about those. Agam, morning.
Good morning, Neeraj. We have a whole host of stocks which will react to earnings. I'm going to start off with something like Dilip Bilcon, and we've seen weak earnings come through considering revenues have risen only 3% year on year, and its profits have declined 28%. Finance costs also rising nearly 10%. Moving on to JSPL, well, it's a strong set here. We're given revenues rose 63%, and we also have a net profit at this point in time at around 344 crores against a loss of around 448 crores. So once again, this is going to have a positive impact on the stock. Glen Pharma earnings were largely in line with estimates, with revenues rising 14% and profits doubling to around 404 crores. crores. Other income was at 140 crores for this current quarter. Engineers India, once again, revenues rising 59%, margins on the other hand, coming off to around 13%. So a problem when it comes to its operations. And coming down to Corporation Bank, contrary to what we've seen in several other PSU banks, the net interest income has risen 18%. Profits coming at around 103 crores as against a loss. So this perhaps could be an exception going into today's day of trade when it comes to the public sector banking space.
Well, let's wait and watch. Some other stocks in news as well. Thanks for that, Agam. But Nikki, some stocks in news as well.
I'm tracking 4 counters this morning. I'm going to start off with PNB Housing Finance, where QIH along with PNB has withdrawn the sales process for selling around 50% stake in the housing finance entity. That's going to be one stock on our list. Second one is the Ultratech development. We're going to be keeping a close eye on this development, given that NCLAT is going to give a verdict on Binani Cement insolvency case today. That's a key parameter because it's going to set precedents also for the SR Steel case, given that the promoters of the entity have expressed the interest to take back over the insolvent set. NBCC, that's expected to be in focus, given that PSU Major has entered into race to buy JP Infra, and the firm is among the top 5 firms which have actually bidden for JP Infra. Hindalco, that's expected to be in focus after market hours development suggested that the downstream facility in Novelis will be expanding, will be putting in more $175 million to expand the aluminium production. So that's again one counter that we like to keep an eye out on.
Thanks for that, Nikki. And we'll watch out for M&M as well today.
Well, M&M for sure, Neeraj, and do not expect any fireworks given the fact that the tractor volumes were lower in the quarter. Of course, this is because of the postponement of the festive season. Now, if you look at the preview, we are using M&M plus MVML, which is its subsidiary, as the base for the preview. Now, if you look at the revenues, we are expecting it to be close to 12,700 crores. That will be a growth of nearly 6% on a year-on-year basis. However, if you look at the EBITDA and profitability, we are expecting a 4 to 6% kind of a decline there. Profits are seen at close to 1,325 crores. Margins also are expected to be tad lower on a year-on-year basis, to come in at 14.6% versus a level of 16%. And this is largely to do with the fact that the overall volumes are up only 4% and the tractor volumes declined 4%. So on the product mix also, we had a weaker mix. More importantly, we had the new Marazzo launch during the quarter, because of which the launch expenses and the other expenses could be higher on a year-on-year basis. And as the case with all auto companies, the raw material costs will be something that will be pinching the overall profitability. Of course, the things to watch out for will be the management commentary on the new Marazzo launch. How is it doing in the marketplace? And of course, on the demand scenario in the UV segment as well as in the tractor segment, and how has been the festive season so far for the company.
Thanks, Nitin. We'll watch out for all of these. So a clear set of stocks to watch out for. Gurmeet, let me pick up a couple of results. Dilip Buildcon, a washed out quarter, but the stock has reacted quite a bit already. Novartis, I thought, had a very poor quarter, as did Engineers India, which came out with a howler set of numbers. Any coverage on any of these 3 names?
So Dilip Buildcon, Neeraj, yes, we cover. I think what was also markets were disappointed was also the increased debt levels despite poor execution. While the management did, indicate that they will look at 10,000 crores top line, but the way the entire EPC space was building up with good numbers from L&T and others, I think the street expected a better set of numbers. And Dilip Buildcon has been one of the bigger beneficiaries of the slew of contracts which have been awarded by the NHAI. So a little disappointed with the numbers, but I think we'll in a wait and watch mode. We'll probably see another quarter. If the debt levels continue to go up and execution remains slow, then it could be an avoid, in the near term.
All right. Let's get in our technical experts as well. We have Gaurav Bissa of LKP Securities is joining us right now. Along with him, Chandan Taparia of Motilal Oswal Securities is also here. Gentlemen, good morning to you. What's the trading setup looking like, particularly on the index? We've had quite a few strategies which suggest bullish momentum on the index. Yesterday, we had a few bull call spreads as well that were recommended. What would your call be? Chandan, I'll start off with you.
Yeah, very good morning. Yesterday, we have seen the strong recovery in the market from lower band of the trading range. And interestingly, it has been consolidating in between 10,450 to 10,650 zone from last 7 trading session. On last trading session, it exactly taken support in the lower band of the trading range, with surge in the put call ratio and the put writing activity. We recommended to go long and still expecting and the positive momentum to continue, and this time expecting this fresh range breakout. So the suggestion is continue to be with long position by putting trailing stop loss or the fresh stop loss of 10,520 and trade for an upside move towards 10,700, 750 kind of level. Looking at the volatility that fell down by around 3.5%, however, it is not going below 70 zone. So overall, the lower volatility with rising put call ratio indicate the up move, but restricted move could be there. So traders can go with the future activity or can go with the bull call spread as well by buying one lot of 10,600 and selling one lot of 10,700. So all the positive strategy or positive setup is visible. One can continue to be with the same to play the positive move.
Okay, we'll come to your stock ideas in just a bit. But Gaurav, Bissa, can you run us through your Nifty call?
Good morning. I totally agree with Chandan on certain parts that the momentum is looking quite positive. However, one thing to notice that with the trend, if it's in the continuously making higher lows, that's a good trend. But if we are seeing incremental volatility, we are up 100 points in a day, we are down 100 points in a day or two. But it does not actually certify that trend is in the place, though the momentum might still be up. So one has to be a little bit careful while placing the trades. There is strong resistance at levels of 10,640, 650 on the spot side, and a good amount of supports at level of 10,440, 50. So as Chandan mentioned that the Nifty has been trading in a range, it's always prudent. Either you buy on the breakout about 10,640 for targets of 750, or you buy on dips towards the level of 10,500, 10,480 with the stop loss of 10,440 and play for upward targets of 10,600, 640. These can be two trades. As far as strategies are concerned, I would be more inclined towards selling a triangle for the reason that we are still to see a breakout happening in Nifty index. So selling a 10,900 call option and 10,200 put option, quoting at a total premium of 65 would make more sense for me. One can play for target of 30 rupees, keep a stop loss of 85 for the same.
All right, selling a strangle there, playing on volatility there. Let's talk about individual stock calls then. And Balkrishna Industries, Gaurav, I'll stay with you, is a buy call from your end, along with Bank of India. The stock got really pummeled yesterday.
Well, yes, for Balkrishna Industries, there are a couple of factors. Among for the derivatives part, we have seen about 2% overreactions happening at the lower levels. It has been finding some supports at level of 930, 935, and it's on the verge of a good breakout on daily charts. It's making a rounding bottom formation on daily charts. So the pattern is quite strong. It can easily go towards the level of 1,020, 1,040. And with the drop in the crude prices, there's a chance that it might again give a positive push to the stock. So one can keep a small stop loss of somewhere around 942, 945 and play for immediate target price of 1,020, 1,040, which I expect in next 2 or 3 trading session. As far as the Bank of India is concerned, we saw a good amount of correction coming. Similar to Balkrishna Industries on an hourly chart, it is forming a rounding bottom formation. About 20% overreaction has been seen. It has seen a bounce back from levels of 70 and 50, 80 rupees. If it sustains the current levels, expect a good short cover rally towards 85, 86. The gap can be filled. So one can keep a small stop loss of 80 rupees, immediate target price of 83. If that is sustained, 86 by tomorrow cannot be ruled out.
Okay. Chandan, your ideas, and I'm picking out 2 out of the 3. One of them is ICICI Bank, and the other one is Jubilant Foodworks, which had a big day in trade yesterday.
Yes, first talking about ICICI Bank, the stock has given a consolidation breakout. Overall trend is positive and also formed a pollen flag pattern and managed to surpass and close beyond or near to 360 zone. So because of that, positive momentum could spike. We also seen the surge in the volume. So this is a case of a price volume account. So because of that, expecting the positive momentum in ICICI Bank, one can buy with a stop loss of 353 for an upside target towards 374. Second trade, buy on Jubilant Food. Already we have recommended on last trading session and continue to be with the same. On weekly scale, it formed a narrow range price breakout and also formed the multiple bottoms near to the lower zone. It is surpassing its immediate support and immediate supply trend line. We have seen the build up of long position with some short covering activity by around 5 to 7%. So all these making sense to be on positive side with trailing a stop loss of 1125, and the stock has potential to move towards 1190, 1200 zone.
Okay. Do watch out for these names. There's one more idea and we'll get to that in a bit as well. But it's time now to get our viewers our special segment Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Good morning, Neeraj. With what crude has done overnight, it's obvious that the oil marketing companies will be in focus, and the stock we are talking about today is BPCL, wherein a positive move is likely to come based on the move we saw yesterday. So it has closed above the 21-day exponential moving average. We saw a big correction in the stock price just a few days back when the government had asked the oil marketing companies to bear a burden of the price cut. But since then, we've seen a smart recovery. But over the last few trading sessions, the stock has been consolidating and has been trading in a narrow band, with 300 being a crucial resistance level. But it has broken above that mark, and there could be further upside given that crude fell more than what it did in the last 3 years on an intraday basis on the back of a weak demand outlook and rising crude inventories in America.
Well, no surprise here that there could be some upsides. Yash, thanks for putting that into perspective. In fact, that's the tricky question. Before I get to Gurmeet, Gaurav, Bissa, would you go out and buy any of the OMCs today? They might start off slightly higher as well. Would you be comfortable buying any of the three?
BPCL would be the one that would be on my radar. We had recommended to our clients as well. 304, 305 is the immediate hurdle. If it opens above those levels, even at levels of 308, a couple of percentage points higher, if it opens, even that would be more lucrative. As long as trading above 305, there's a good chance it can go towards 320, 322 in next 2 or 3 trading sessions. For me, BPCL would be on the radar. IOC and HPCL might follow, but they are not giving as clean data or as clean chart pattern what BPCL is giving at this point in time.
Gurmeet, what about you? Considering the stocks have already run up in the recent past, do you see the likelihood of these stocks being in the favor for a longer period of time? And in particularly HPCL, I mean, that has about 60% of the revenue contribution coming in from its marketing revenue, so a key beneficiary there. But nonetheless, what's the impact analysis of this that you've done in terms of your initial calculations?
See, I've always had a contrarian view on OMCs, even when the fuel prices are going up. We have had that discussion that they were available at almost book value. I think the key trigger could be if the 1 rupee burden, which the government has put, could be rolled back. If that can happen, then you could have a potentially big upside. See, other than that, as I said, both HPCL and BPCL, are very good companies, excellent ROEs. Both of them have more than 20% plus ROEs. HPCL also is the largest lube-based refinery, which is a lubricant-based refinery. HPCL also has the second largest product pipeline network. The network is almost more than 1,300 kilometers. So I think near term, yes, because oil prices have softened. Also, I think it's a from a valuation point of view considered, and I have a view on oil that over a medium term, oil prices can't remain very high. So you have to rely on that view to take that call. So I am positive on OMCs, both from a short term and a medium term perspective.
It's interesting, Neeraj. Obviously we should get the managements to talk about this and what this means, but their margins would have definitely seen an improvement. But the question here is that whether they retain that or they pass it on.
And whether the inventory losses are high enough in this quarter as well on the reported numbers.
Yeah, of course, that too. So whether these two as a combination work in their favor or it doesn't. So while we optically saying that softer crude oil prices works in favor, and we've seen the kind of run up that most of these stocks are having, it'll be definitely interesting to see the breakup of the numbers and what comes out of it.
Yeah, so do watch out for these. Actually, the other bit is about what happens to some of the other counters. Frankly, in this conversation about crude, it always stems down to airlines and OMCs. What happens to paint companies? What happens to select other pockets? Tires, for example, and they were on a bit of a roll. Seat and the likes in trade yesterday too. And whether they form a part of the buying list of anybody because of this sharp pullback in crude prices. Gurmeet, any fundamental thoughts on a Seat, Apollo, etc.? The numbers have looked okay. Or maybe even the paint companies as a result of the crude price fall?
Yeah, so you rightly said, Neeraj. I think we are positive on paint companies, despite rich valuation in Asian paints. So one reason obviously is I think the raw material cost overhang might remain for a quarter because you are seeing probably softening now coming in the middle of the quarter. But in paints broadly, we feel there are 2-3 structural drivers in place. There's a movement from lime to distempers and paints. the repainting cycles have shortened from 7 years to 3.5, 4 years. We are seeing a secular growth of nuclear families. So I think paints and with Asian Paints at 65% market share, even if you see this quarter numbers, the decorative paints volumes were up double digit. It was the industrial segment which was flattish, and the margin contraction was because of the cost. So positive on Asian Paints. On tires, again, I think there could be a 1 quarter overhang, but prefer Seat over Apollo. Apollo had a soft set of numbers which came in yesterday. So on that, we prefer Seat over Apollo, but maybe with a 1 quarter lag.
Supposed to see Neeraj, 1 minute left, but hopefully driving becomes a lot more cheaper for us now in Mumbai. Still at 83.
Yeah, from 89 to 83, but yeah, 83 is...
Brent is at 65, WJ is at 55, so we should probably get better.
Sub 80. I certainly hope so. But actually, well, Chandan, if you want to come in quick 30 seconds, any of the tire companies, Seat, for example, was very active in trade yesterday. Would you look at trades here?
Yeah, I was looking the chart of crude as well. It is continuously making lower highs, lower lows on the weekly, or some more weakness could be seen. Talking about the tire companies, Seat is a counter where it has bottomed out and surpasses 50-day exponential moving averages. We have seen a strong positive action with consolidation breakout. So up move could be seen, which may take it to 1300 kind of level on immediate basis.
Okay, 28 seconds left to go for market pre-open. It's going to be an interesting session to watch out for. Not for the open, but the entire session itself, because with the last few days, it's been quite divergent, the way the market opens and the way the market shuts. So it's going to be an interesting session in terms of the volatility as well. That's the SGX Nifty for you, 10,649, holding on to those gains on the SGX. Ticks on your screen, the initial price movements on the Nifty as well as the Sensex. Again, not too much that you can read into right now. Just about 0.5% for the Nifty. Sensex is 1.2%, so very a big gap out there, primarily because of a few stocks that are not present in the Sensex. But we'll wait for these prices to stabilize and then come back to it. Tata Steel is up 10% on the back of its numbers. The stock right now, okay, it's already cooled off, 3.5% now. BPCL 3.5%, IOC 2.5%, HPCL 2.5%. Whether this number extrapolates into something bigger is something that we want to wait and watch out for. Asian Paints, we were talking about paint companies and how the fallen crude oil prices could aid some of these paint companies as well. Asian Paints is up 2%. HUL Z is up 1% in the session, so no meaningful impact of the news that we just discussed some time back. Reliance Industries up about 0.5%. Then amongst the losers, Sun Pharma is down 9.2%. So Street really disappointed with the numbers, that one-time loss that came in. Management did reiterate that they should not be, too much should not be read, and they are still focusing on improving their operational performances in the next few quarters to come. But in light of what Tata did, much was expected from Sun Pharma, which didn't happen. Bharti Airtel down 2.2%, Wipro, HCL Tech and Ultratech in the red.
Bring up the currency and see if that has improved, and oh boy, has it moved, the rupee, and primarily because of crude. 72.12, this is a very sharp pullback for the rupee. We are now closer to 72 levels. Earlier the beliefs were that we'll go to 75. We may still do that, but for now the currency is showing some remarkable strength, primarily because of the crude cool-off. The yields, the 10-year yields should come up on your screen, 7.76. They're steady, and well, it's good to have yields steady really, but the currency has really remarkably pulled back from those lows, so good going there. What's moving at the broader end of the spectrum? Castrol has some gains. Let's wait and watch if that lasts. Schneider Electric has some gains, 13% higher. Let's wait and watch if this lasts. Bharat Financial about 5% higher. Reddington about 4%. No newsmakers trader on the gainers list. Let's see on the losers list. Ashok Leyland, a slam dunk, 10%, 107. Yes, the market would take it negatively. We'll talk about this again. I suspect that this could change a little bit, but the fact that Vinod Dasari has resigned and will be out of the company from 1st April 2019 should have some negative bearing. Again, let's hold on to our horses and let's see what happens at the end of the 8 minutes. Dilip Buildcon is reacting negatively to its numbers. Not surprised there either. I want to see what Engineers India is up to and whether that stock has reacted negatively to its numbers. No, not quite. Novartis had a very poor quarter. Let's see if that one is reacting to its numbers as well. EBITDA loss for a Novartis and therefore, in all likelihood, that one too should be reacting negatively. Boy, that is a big gash on Novartis India. Arguably turns out to be the stock of the morning if indeed these rates turn out to be true. But yeah, an EBITDA loss for a pharma company won't be surprised. All over the place. Let's wait and watch. May not be 19%. Let's give these rates a chance to settle down. But all in all, a flattish start. A few stocks reacting here and there. Bombay Dyeing is up 5%. Curiously, it's been omitted from the MSCI index. Divis is the last one that I want to point out. Fresh addition into the MSCI global indices, about 1.5% higher. We'll maybe get in some chart checks going in. Actually, let's do that right now before we get into the brokerage calls. Divis starts off about 1% and 0.3 higher. Gaurav, you want to comment on Divis, and is there a possible trade here?
Divis had given a small breakout yesterday above levels of 1520. So as long as these levels are sustained, we can expect a small jump towards 1545, 1550. It's already moved up quite a bit. I would not be playing for large targets, but probably a couple of percentage points up from here can be seen in a day or two.
Okay, let's go across to Samit Sarkar now, who joins in with the top brokerage calls for the morning. Samit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is IDFC Securities on Shankara Building. Now the brokerage has downgraded the stock to neutral from outperform and has cut the target price to 1,065 from 1,825. Now according to the brokerage, cost pressures and transitionary challenges have impacted the company's earnings. Now the brokerage is expecting the retail sales growth to remain healthy for the company, but due to company's focus on cash sales and to improve balance sheet, its sales growth when it comes to the channel and enterprise business will see a muted growth, says the brokerage. Now, lastly, the brokerage says that the opportunity size is huge for Shankara Building, but its earnings visibility is expected to be weak due to medium-term headwinds. Second, we have is Nomura on Ashok Leyland. Now, the brokerage has maintained its neutral rating on the stock and has marginally cut down the target price to 123 from 125. Now, according to the brokerage, the second quarter EBITDA of the company was lower than estimates on weak product mix and higher discounting pressures. Now, the brokerage has maintained its neutral rating on the stock because it is expecting an economic and financing slowdown to dampen the CV cycle, and in fact the company management has also indicated that they have seen a slowdown in demand in the last few weeks. Lastly, along with this, a resignation of its MD and CEO Vinod Dasari may cause some short-term concerns for the stock, says the brokerage.
All right, so Amit, thanks very much for that. Those are top brokerage calls coming in. Should pull up what's been happening in an HEG as well as a Graphite India. Remember, just up until a few weeks back, these stocks on the back of an upgrade that came in from Bank of America Merrill Lynch saw a tremendous amount of activity, which propelled HEG from levels of 3,600 to levels of about 42, 4,300. It's come off from those levels at 4,200 now. But anything that looks like a buying incentive into any of these names, Gurmeet?
Divina, sorry, I missed it.
HEG and Graphite India.
Too expensive. You know, I had a call on HEG about 6 months back, but too expensive right now. While you could, what we have seen is that while the numbers will continue to be good, the valuations may not warrant a further jump in the price. We've seen that happen even with a lot of tech stocks globally. That once you are at that valuation zone, and I think we should learn the lessons in just the correction gone by. The earnings with valuation is the key right now in these kind of markets. So while I'm positive on the operating performance, may not be a big price jump, even if the operating performance supports it.
Okay, Chandan, would you short a Sun Pharma?
So looking at the pharma counter, Sun Pharma witnessed some recovery, but again fell to hold above its 50-day exponential moving average and surrender its gains in last two trading sessions. So weak structure is clearly forming, and on daily scale it is also forming in head and shoulder pattern, which also indicates the negative sentiment could continue. So yes, some weakness could be seen. Strict stop loss or the put buying activity could be seen in the counter.
Okay, I just want to talk about the extent of the uptick that one can see on the index, because I think the index becomes the big trade because of what's happening to crude. But we've had a bit of a rally already. Now, Gaurav, for somebody who doesn't have a position right now and is trying to explore whether or not he can buy some call options, is it a good idea? To what levels do you believe this current rally can last? What are the charts or the F&O indicators telling you?
Buying a call option at this juncture would not make much of a sense because we already seen a good amount of vacuum in last few trading sessions, and today also we're opening with a small gap up note. So I would not be too interested in buying index call options, but probably yes, any dip towards 10,550, one can try to nibble in the 10,800 call options. As far as where the index can head to, right now the data suggests that it can go towards the level of 10,750 to 10,800, which has a very strong resistance. And if it sustains those levels, we can probably aim for higher levels, but that would be again anticipating whether we'll be breaking or not. It would be better if we review once Nifty touches the level of 10,750. A lot of averages are converging around those levels, and we have had a strong correction from those levels as well. So it would be very prudent. Let us see and whether we are holding on to 10,750 or not. But for the time being, that is where Nifty can head to.
Yeah. Okay. Got that. One stock that is probably of interest, and on a year-on-year basis, the stock has given you returns of 104%, and that's Radico Khaitan. The stock recently broke above all of its three simple moving averages, the 50, the 100, as well as the 200-day moving average. And now, as you can see, is seeing some amount of strength. But the other point to notice here is that with this move in prices, the volumes have actually not picked up as much. So the price has been led by low volumes. Whether or not we read into any of this, Chandan, how would you look into a Radico Khaitan on the basis of these data points? Volumes have not picked up, but nonetheless, the pricing action is very strong.
Yes, looking at the higher degree chart, the stock has given a strong consolidation breakout, moving upwards from last 2 years and making higher tops, higher bottom formation on the daily scale. So the whole data setup indicates that positive momentum could be seen. We have seen a strong surge in the trading and the delivery volume activity. So I think the potential to move towards 475, 480. And in F&O space, we are also looking at the UPL or McDowell, where some price volume breakout could be seen in the counter.
Okay, stay on, gentlemen. We'll also get our viewers one fundamental stock idea that you can invest into, but we're just minutes away from market open. So let's tell you all that you need to know to stay ahead in trade today. The last two Nifty companies, Grasim and Mahindra will report their second quarter numbers today. Other important companies reporting the numbers include Motherson Sumi, Page Industries, Thermax, as well as Ujjivan Financial.
All right, amongst other earnings which came post-market hours, Tata Steel, JSPL, Corporation Bank and Mahanagar Gas reported strong numbers, while Glenmark met estimates.
On the other hand, Sun Pharma, Ashok Leyland, Dilip Buildcon, Deepak Fertilizers, Novartis, AstraZeneca Pharma and Abbott India are the companies that came out with a poor set of numbers.
Zee Entertainment's promoters say they plan to sell 50% of their stake in the company to a global strategic partner.
Ashok Leyland will be the stock in focus today as markets react to the MD and CEO Vinod Dasari's resignation from the company. The resignation is effective from March 31st next year. Dheeraj Hinduja will be stepping in as executive chairman with immediate effect.
And a few changes to the MSCI index. Divi's Lab gets included in the global standard index, while BHEL and Siemens are excluded.
Well, interestingly, 2 or 3 names to monitor. I think the steel companies have started off well, both Tata Steel and JSPL. Decent numbers, JSPL, rather strong set of numbers as well. And both the stocks are likely to start off about a couple of percentage points higher. Gurmeet, we haven't quite spoken about these. Did you like what JSPL or Tata Steel have done?
Yeah, absolutely, Neeraj. I think what also is very important is the deleveraging, which could happen. In Tata Steel, it could be almost $1 billion. And we have seen that these two players have been derated and downgraded because of the heavy debt component. So price hike, volume growth, deleveraging, I think everything would work probably in the short to medium term. So buy on both of them. Prefer Tata Steel over JSPL. Secondly, if you see on valuations, it's about 6.5 times EBITDA FY20, which also is very, very reasonable.
Okay. Gurmeet, if somebody wants to put in fresh money to work at the current market juncture, non-index idea, what is that idea?
So, Neeraj, 2 of them. One, which we have been discussing, of late is the fast-moving electrical goods space. Like both Bajaj Electricals and Havells. I've been traveling and speaking to a lot of the dealer network. I think there's a big surge coming across products. We talk about switch gears, we talk about cables and wires, we talk about electrical appliances, I think it's a combination of uptick in rural economy. It's a combination of unorganized to organized, GST benefits. We can add all of that. So that space looks to me, extremely attractive. And I have a view on, some of the, companies in the agrochemical space. I think with elections coming in, companies like Bayer Crop Science, companies like Deepak Fertilizers, I think they will do very, very well.
Okay, so those are a couple of ideas from Gurmeet, Chadha of Complete Circle, things that you can put in money to work right now. Less than a minute away from the markets to kickstart trade. Just quickly, Chandan, Taparia on the Nifty Bank, it looks like starting off about 200 points higher. A quick 30-second view here.
Yeah, Nifty Bank has taken support at 25,500 zone and surpassing 25,900 could open the phrase up more towards 26,100 to 26,250 kind of levels.
Okay, that's a call on the Bank Nifty, which is looking strong as well. Let's take some top calls then as we enter into trade this morning. I'll start off with you, Gaurav Bissa.
It would be Balkrishna Industries, the kind of setup that you have seen. It can easily go towards 1,000, 20,040. So for me, Balkrishna Industries would be the call for.
Okay, that's at 962 in pre-open. Let's see how it opens up for trade. What about you, Chandan?
Yeah, ICICI Bank already discussed about the same, expecting the positive momentum and move towards 374 kind of levels.
Oh, well, a couple of ideas out there. So do watch out for these names as well. ICICI Bank and with the Nifty Bank doing what it is doing might be a clear favorite. Stay on, gentlemen. We'll just take in opening thoughts from you before we thank you. But the market's just about to start off. 10 seconds left the market to kickstart trade. Expect a dash of green. The question mark only is with this 7% downtick in crude and the currency moving so strongly. Could there be further build up of the greens and the long positions during the course of the day? We'll find out soon enough. 0.5% on expected lines for the Nifty Bank to about 0.75% or 2/3% or thereabouts. The mid caps and the small caps. The small caps I don't quite know. The mid caps would have started off well. The small caps usually, as they do, a bit lazy at the start and then they tend to either pick up or go down materially. For now, about 0.6 or 0.5% for the mid cap index as well. The heat map should be a tick of green, a large tick of green across, very little red as I said. Sun Pharma reacting a little bit to its numbers and technology being the defensive slightly out of favor today because the bets will be on the aggressive side. What's moving on? HPBP, IOC, strong moves out there for each of them. In fact, cumulatively, the last 4 days, they would have moved quite a bit, northwards of 10% apiece, I believe, for at least 2 out of the 3. Asian Paints is the other one, which on expected lines does well. Tata Steel and JSW Steel, both of them on results, do slightly okay for themselves. And ahead of the numbers, Grasim is about 1% higher. Otherwise, banks, while collectively might be doing okay, we don't have one big bang mover in banks, despite the fact that the Bank Nifty is doing reasonably okay, still about 0.6% higher, but no big bang move in the banking names. It's just a cumulative movement across the board. So, fair bit of green on the screen, just a couple of pockets that I do want to highlight myself before I hand it over to Devina for finding out what's happening across the mid-cap space and the top movers and shakers. One, yesterday's top movers and how they are doing. Seat, Jet Airways, Radico, all of them start off positively. Radico marginally at that, but the other two certainly doing well for themselves. What about result reactions and some poor results that came out, and let's see what's happened to these stocks. EIL not reacting as much, but Deepak Fertilizers and Novartis in particular reacting 5% down for a Novartis. What is Ashok Leyland up to after the slightly weak quarter and Vinod Dasari's resignation? 7.5%, arguably turns out to be that largest mid-cap stock of the morning. Devina, what are you spotting?
Some more results and the reactions thereof. Jindal Steel and Power reported Q2 numbers where profits came in much higher versus a net loss last time around. The stock's up about 2%. There was an exceptional gain though on that counter. Dilip Bilkon net profit was down 28% at 83 crores. The stock has seen a 7.5% cut this morning, so disappointing numbers, and the street is disappointed. Glenmark Pharma being the other one, net profit was up 98%. Margins came in at 17% versus 17.2%. There was another income component of about 140 odd crores. That's Glenmark Pharma, if we can have that. And a Corporation Bank, Mahanagar Gas are some of the other names. Glenmark is flat and nothing much happening out there. Corporation Bank reported numbers along with Mahanagar Gas. Some other names, and ICICI Prudential is down about 4.5%. Emphasis again lower by about 1.4%, and it's had a losing streak for quite some time now. Siemens is down 1%. RBL Bank, Karur Vaisya Bank. Most of the PSU banks should be brought up because yesterday's session saw Allahabad Bank tanking. You've got the likes of a UCO Bank, Bank of India. All these stocks plummeted in yesterday's session. There's some recovery in Bank of India. UCO Bank still reels under some amount of pressure.
Sorry, want to mark more stocks? Okay, let's just get in quick perspectives from our technical experts and then get on to Manishi Raychaudhuri. Gaurav, Bissa, quick opening thoughts. Anything that stands out?
The market has opened near the resistance levels, but one stock that looks good is Vedanta. One can have a stop loss of 203, 204 on the upside. Targets of 212 to 13 can be seen. This is bouncing from the support levels. 200 put option also seen good amount of writing. That would be the stock that can be on the radar.
Chandan, what about you?
Positive opening, and I think the momentum would continue. Oil-related companies like HBBP and Asian Paint could be on radar. Asian Paint has given a fresh breakout, so one can look here for a movement of 3-4% on higher side.
Got that. Gentlemen, we leave it at that. Thanks very much for joining us. Appreciate your time, Chandan as well as Gaurav. Thanks for being here. Manishi Raychaudhuri, equity strategist for India Pacific at BNP Paribas. He's joining us on the show right now. Manishi, thanks very much for taking out the time. Before we get onto equities, obviously the hot topic for today is what's happened in crude and the cut that we've seen in the bear market for both Brent, WTI. What do you see as being the peripheral impact of the same across global equities as well as particularly the Indian equities?
In general, I would think for Indian or Asian equities, it should be treated as a positive. By and large, the Asian economies are importers of the commodities, and there are large Asian economies like India and Indonesia, which are large importers of crude. So that's obviously a good news from the perspective of inflation, current account deficit, and fiscal deficit of these markets. And in that respect, particularly, India stands out. As far as the global economy is concerned, I think the indication or the consequence is possibly mixed, because it also tends to indicate some degree of demand slowdown. Even though I would think that the present round of massive correction, almost about 24 to 25% over past 6 weeks, is possibly more attributed to the geopolitical churnings that we have seen. Also, the U.S. reaching the agreement to give a waiver to the Iran sanctions to 8 large importers and that. So all these things have, possibly contributed to this oil price correction that we've seen. But on the whole, for Asian equities and particularly for Asian currencies, that's obviously been a positive tailwind.
Manishi, from a person who's been observing India, while we've been talking about several macro factors, we've been tracking the earnings as well from a micro perspective. This time around, Q2 numbers, more in line and slightly borderline disappointing rather than the other way around. In terms of internals, how have you broken them down as to make a case of investment for India?
Right. So you're very rightly you pointed out that this particular quarter's numbers have been borderline disappointing, and this is a bit of a departure from what we had seen in the past 2 quarters, when the numbers were actually slightly better than expected on the whole. We have seen a reflection of this in the earnings estimates. Over past 3 months, the consensus EPS estimate for both fiscal year 2019 and fiscal 2020 have declined about 7% or so, and that's pretty sharp, to have it over last 2 to 3 months. We think this is possibly the Achilles heel as far as Indian equities are concerned. Even though the market corrected about 10% from the peaks in September, the valuations didn't correct all that much as a consequence, because the earnings estimates also came down. And we think that as a consequence, India's valuation premium to its peers in Asia is still maintained at a relatively high level. And I think that's one of the headwinds to Indian equities outperforming its regional peers at the present point in time.
Good morning, Neeraj here. What would your global clientele be telling you about India now that the big overhang of crude for now is not a worry?
Right. Yeah. So, I think clearly to the global investor base, this decline in crude has come as a positive surprise, particularly when their investments in Asia and the countries like India or Indonesia are concerned. And we could actually see, therefore, a degree of a renewed fund allocation to India and possibly even a relief rally. Now, having said that, crude prices are notoriously difficult to predict because they move in, as a consequence of so many different drivers. So I don't think the international investor is still willing to hang his hat on a sustainable decline in crude prices to an even lower level. They're obviously closely watching this pace, and the most recent tailwind has clearly come as a positive for them. We must remember that overseas investors also take a currency risk when investing in India, and currency stabilization has possibly been one of the biggest relief factors. But I personally think that the foreign investor who actually reduced his position in India by almost about 1.5 to 2 percentage points over last 1 year will be in a mood to wait and watch and only make small adjustments to his India position for now.
Would your advice be, Manishi, to your global clients? I mean, would you advocate the same approach, that stay on the sidelines, or if you are putting in money, put very selectively? And what should one wait for? Should one wait for some sustainable decline or sustainable levels in crude prices, or should one wait for the elections to get out of the way? What would you advise your clients?
Yeah, it's a combination of all these factors that you mentioned. We downgraded India from an overweight to neutral in late June or early July, so about 5 months ago. We're still maintaining that position. It has worked the way we thought it would. India has outperformed rather underperformed over the last 3 to 4 months as a consequence of the sharp currency depreciation that we had seen. And many of those factors, the biggest concerns or the biggest worries are possibly now behind us. We're seeing a stabilization in commodity prices, particularly crude, and as a consequence, we're seeing a stabilization in the currency. That is also coming as a significant easing factor as far as the monetary policy is concerned. Notice that inflation over the last 3 months has been undershooting the RBI's reference range. And as a consequence, we think the RBI may not really need to increase interest rates immediately, clearly not in December, if necessary only in the first quarter of next year. So all these things, the macro factors, are possibly turning out to be better over the last 1 month or so. What is not so good, and I alluded to this right at the beginning, is the earnings estimate, which continue to keep declining. There was a bit of a lull in the first half, or the first 2 quarters of this year, as far as the earnings estimates were concerned. They were flattish. They didn't decline all that much. But over the last 2 to 3 months, we have seen these earnings estimate declines again come back with a vengeance. They have happened in the public sector banks, in the non-banking finance companies. We have seen them in the consumer discretionaries, in the auto space, which was hitherto quite resistant to the demand pressures. So I think the earnings estimate trajectory is the most important variable that investors are watching today, and so are we. We must keep in mind that, at least in the first half of this year, North Asian earnings estimates were relatively resilient. Of course, now they have declined over the past 3 to 4 months. So Indian earnings estimates need to catch up with the other Asian peers, or even part of the developed market peers, before we can be sanguine that the valuations are really indicating better futures going forward.
Right. Manishi, you've closely watched auto as a pocket. Anything there that probably propels you to take it as an opportunity to reevaluate an entry into the auto space, and then again, any other pockets of interest?
Right. Okay. First, regarding auto, yes, I think the correction in the stocks that we have seen, there are large frontline auto companies who are market leaders in their respective segments, which have corrected about 30 to 35%, even more in some cases. So I think the auto sector, both the four-wheelers, the passenger vehicles and the two-wheelers, are selectively providing entry opportunity for investors. As far as the other sectors are concerned, we are positive on the private sector banks. We are also positive selectively on the non-banking finance companies, which have corrected massively as a consequence of the liquidity concerns. I think the market has painted that entire sector with a broad brush, and within the NBFC space, there are a few decent, good companies which are engaged in profitable businesses like, the consumer lending NBFCs in particular. We also like the oil space, the oil refining space, again selectively, partly because of the decline in oil prices, which lifts the concern about increasing subsidies on that sector. And finally, we think that despite the fact that the currency is now stabilizing, I think the Indian IT service companies, particularly the large frontline IT service companies, which are possibly in the process of changing their business models, they would also make sense over the medium term.
Well, and we have one such large IT company coming up in just moments from now. Manishi Raychaudhuri, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time, and have a good week ahead. Well,
same to you.
Thanks, Manishi. Manishi was speaking about large cap IT. On the other side of the break, a special conversation with Rajesh Gopinathan of TCS on how the IT major is driving away from traditional services into more new age tech. Stay tuned to Bloomberg Quint Live.
Good news, guys. Got a promotion and a damn good raise.